What's going on, everyone? It is Paul, the 920 Trader with 920 Trading in Trading Dakota. Today is Tuesday, March 26, 2024, and this is how we trade a spot today. But before we get into the charts, if you like our videos, please consider giving us a like and a subscribe. Don't forget to turn on your notifications. That way you can be the first to be notified when we drop new content, which is just about every day. And sometimes on the weekend. Also, leave us a comment. We appreciate every single comment. And don't forget to share with your friends, neighborhoods, and everybody you know. Just go ahead and do it. Not your neighborhoods, but your neighbors. Okay, so again, let's get back to the charts. We are looking at a pre-market high of 522.26, a pre-market low sitting at 520.57. So I'm looking at it thinking, okay, I've got almost $2. What do you got? $1.70, $1.80, somewhere right around in there. That's not bad, but think back to yesterday what we had. We had the three things that we're looking for every day. We're looking for volatility, we're looking for volume, and we're looking for range. We didn't really have any of that yesterday until the end of the day, and then the dam broke, and it was just absolutely glorious to the downside. Today, coming into pre-market, you really don't get any true volatility until you start into the trading day. But let's look at all these zones that we have between pre-market high and pre-market low. Now, every single one of these zones, unless it is labeled, is a 30-minute zone. So we've got a 30-minute zone here. We got a 15. Now, these are really interesting right in here. We got a 15-minute double top and a 15-minute double bottom, both in pre-market. So we've got these two zones that are really, really close together, followed by, again, now this is an intraday double bottom times two. There were multiple double bottoms at this level. So at, what do we got there? We're looking at about 520.95. So these are levels that we made throughout the day, this level right here. But again, every other level on the chart, folks, is a 30-minute zone. So without further ado, let's get into the trading day. So we're thinking, okay, well, you can already see what I did. Took this to the downside, did not take that opening play, but caught this death cross. We have the POC sitting right around here, 521, somewhere right around here. And I said, you know what? I'm not going to miss a death cross this morning. So we were below the VWAP. That's always a good thing. We were below the 9, below the 20, double cross to the downside and through the POC, all in the same candle. It's pretty close to a death cross. We would need VWAP to be a little bit lower to be considered a really, really good death cross. I am not the biggest scalper in the world, folks. I like to stay in my trades and see where the trade will go. But I've had a couple recently where, I thought we were going to push lower. We ended up not pushing lower. So I turned a decent winning trade into a losing trade. Now, don't get me wrong. I'm not one of those guys that says never let a winning trade turn into a losing trade. I'm not that guy at all. I have trades all the time that start out winning, they turn around, and then they go in the opposite direction. That's just the reality of it. I've got targets that I'm looking for, and if it doesn't hit the target, it comes back and hits my stop. So there's a lot to be said for it. If you're a scalper, get into the trade, get out of the trade relatively quickly. A decent trade, I don't know, 16, 18, 20%, something like that. Not a real big winner. So I took that trade right out of the gate. Now, in looking at, again, we're looking for those three things. Volatility. We had very, very low volatility again today. Now, if you think about the majority of yesterday, we bounced it around in about a 70-cent range for the vast majority of the day until we got that final play. Is today the same? I don't know. But based on, number one, lack of volume, we didn't have a whole lot of volume. If you look at this first 1 minute, we had 301,000 shares, which is that's decent for the first minute. But, we get into the regular trading minutes, we're talking about, it's a little low for open. We like to see higher volume. But we didn't have volatility. And so far, the range, right out of the gate, 20, 30, 40 cents, it's okay. But it's absolutely not what we're looking for. But again, took that trade right out of the gate to the downside. I took this next trade back to, again, I had a nice cross to the downside. Again, didn't play anything to the upside. Took this to the downside with the expectation that we'd be able to do the same thing. To come down here to this 520.85 again. But guess what? It didn't happen. I was pretty slow on it. Looked away for just a few seconds. Again, it was a good entry. I don't think there was anything in the world wrong with the entry. Could have taken one of these in here, but I don't remember what was going on at the time. But I didn't. But anyway, took this back to the downside. Figured that we'd taken out this 30-minute zone. You know what? Let's go find some more buyers down here. At any rate, this trade was a losing trade. So at this point, because it moved against me, and when the plays move against you, they move against you harder than they do in your direction. And again, a lot of that depends on where you're playing on the options chain. I like to play it in or at the money. But at any rate, decent here, had a nice little loss here. Oh, well, it happens. Now, the next trade back to the downside, I took the same trade and look what happened. Look what happened. I said, you know what? I'm not going to let that happen to me again. So I took off the trade at this level where we had this wick earlier. And guess what it did? It came down here and hit my 30-minute zone perfectly. So let that be a lesson to you, folks. Let that be a lesson. It can happen once, it can happen twice, but it finally broke through to the downside. This got me back on the winning side of the margin for the day. Not by much. We're not talking about much. The execution probably could have been a little bit better. I could have given this a little bit of room to breathe. But again, we had that wick down to this area, or this wick down in this area. It happened here, so I thought, you know what, take the trade off the table. Decent little trade. Could have trusted a little bit more, but the last couple of days, folks, have been two of the most difficult days that I can remember in the market. That was not a day like a holiday, like the day after Thanksgiving, 2024 or 2022, 2023, both horrible days. The week after Christmas, 2021, absolutely horrible. But these last 2 days were kind of the same. Number one, we didn't have a whole lot of volume. Number two, we didn't have any volatility at all. I think we're running 11, 12, 13%. We need a lot higher volatility in order to make these things really pay off. Now, the good news about a day like today is, generally speaking, you are able to hold on to your trades longer to get down to your targets, because when they move against you, and again, this is generally speaking, they're not moving against you as hard as they move against you on a regular day when we have a lot higher volatility and a lot more range and a lot more volume to deal with as well. But it's easier to hold your trades longer. Now, the caveat to that is, once you hit your stop, you take yourself out of the play. You always must predefine your risk before you ever enter into the play. You have to know, folks. You have to. Rule number one is protect your capital. You can't grow your capital unless you first protect it. Now, you have to put your money on the table, absolutely, but you must know where you're going to stop out every single time. So based on this, I'm thinking, there's not a whole lot in here. And truth be told, there wasn't. You look at these ranges between these zones, and we're not doing a whole lot at all. The majority of the day played out just like this. You can do one of multiple things on a day like today. You can either look at the chart, look at the volatility, look at the volume, look at lack of range, and say, you know what, I'm going to sit this day out. And that is perfectly okay. There's nothing wrong from taking a day off trading, folks. Even if you trade full time like I do, there's absolutely nothing wrong with taking the day off. It's fine to do that. I'm in a position where I'm in a group and I'm talking people through trades, and I'm helping people and teaching people to trade. So consequently, I'm in front of the monitor every day. So if my setup is there, generally speaking, I'm going to take my setup. My preferred times to trade are going to be the first 2 hours of the day. The first 2 hours of the day, generally speaking, unless there's news or some sort of catalyst, those are the best times to trade. And the last hour of the day, they don't call it power hour for nothing. And, generally it's been about that last 30 or 45 minutes where you typically get those really good plays. I think what you'll also find is, if you look back at the chart, you get about 3 out of 5 days, you get really, really, really nice plays at the end of the day. 2 out of 5 days, it doesn't happen. So just kind of figure, 3 out of 5 days, 3 days a week, you're going to get really, really nice plays at the end of the day. But again, lacking volatility, lacking volume, lacking range, I was just not interested in taking anything back to the downside until, look what happened here, folks. We had a play in here. Again, we touched this 521.45 to the upside. We had a hard time clearing that area all day long. You can look at all day long. We had one candle close above that area all day long. So I think the smart play in here, again, no volatility, no range, no volume, would have been to take a position here. But I said, you know what? I'm not really interested in doing that, only because I don't want to get whipsawed. And a whipsaw today is not a whipsaw like on a typical day. So it doesn't hurt as badly when they move against you. But this play right here, I mean, it was a really, really nice play to the downside. It took a long time to actually play out. I think it was, I don't know, hour and a half, somewhere right around in there, which is a long time to be in a trade. I mean, that's a good amount of time to be in a trade. So, I mean, it just ran down. I mean, we're making lower lows, we're making lower highs. It ran down. It was a really, really nice play to the downside. Had multiple crosses, but guess what? We stayed below the VWAP. And again, it didn't do a whole lot. And at this point, we're at 2 o'clock in the afternoon. So you're thinking, well, is there anything left to play? And I thought, you know what? Let's see if there's another play left in the tank today. I had a target down here. I was looking for this pre-market low. Then I had another target down here at 520.44, which we, quite frankly, did we get there all day? I don't think we got there all day. Look, nothing. There's nothing there, folks. So I took this trade right here. So why did I take it? Well, I took a double cross off the top. So it was, we opened above the 9, closed below the 20, and below this 520.95. So I'm thinking, you know what? Let's see how this thing plays out. Well, hit this first target low, hit it within the first, I don't know, 10 minutes, 15 minutes, something like that. And then it came back, it reversed, pulled back a little bit to this level. I think the POC was up here at this time. And these zones are, again, they're super tight, 520.85, 520.95. And I don't know how many times I said those levels throughout the day, but I said them multiple times, folks. Watch out for 95, watch out for 85, watch out for 76. We had another level down here at 74, 76 that we were trying to breach to the downside. So I held on to this trade. Obviously I let it turn a little bit red, and theta is working against me. So it was probably quite a bit red. And then I wrote it down to my target. Look at that. It was a beautiful target right down in here. I was in this trade, I think, for 42 minutes. This was a 42-minute trade to make 27%. You're thinking, 27%. 27% is a decent trade. There's absolutely nothing wrong with 27%. My average trade's a lot higher than that. The last couple of days it hasn't been, but it is much, much higher than that. Now, at this point, it's 20 minutes after 3 at this point, and I thought, you know what? I'm just going to get up for a few minutes, go get a glass of water, bottle of water, kind of stretch my legs. It's power hour. We're having a hard time getting through this. I thought, I nailed this exit down here. I got out at the very bottom, so I stepped away from my computer for a few minutes, and guess what happened? You are seeing exactly what happened right in here. This is one of those moves. This happened just a couple weeks ago. I stepped away for a few minutes with an open position, and it slammed down. I think I had a 500 or 600% win. This would have taken my contracts like a 500% win. Easy 500% win. As a matter of fact, a buddy of mine called me when this thing was going down. I think right in here. He called me, and I was still away from my computer. And he said, "Oh my God, you're missing the play of the day." And I said, "Please tell me it didn't go down." And he said, "Yes, it went down." I missed the play, folks. I missed it because I stepped away. Let that be a lesson to me. Don't step away in power hour. Don't do it, folks. Just wait for your setup. We had, again, we could have had a nice entry here. The bounce off the 20 back to the downside, came through these two levels. Where's your stop? You got a tight stop, and then just let that thing cascade down to the depths. So it hit my level down here, 519.81. And again, that was the level that I had on there all day. It was a target, but again, lack of volatility, lack of volume, and not a whole lot of range. But look at this volume as it picked up down here. I mean, we're talking about 600,000 shares on this one trade. Yeah, so it kind of leads me, were they accumulating positions slowly over time to take it down once they hit a volume of thin area? Probably. I don't know that there was necessarily a catalyst right in here, but that's my best guess. They do that back to the upside. They do that back to the downside, folks. It's it just happens. I missed the trade. So, I missed the trade and I said, you know what? I did miss that one, but let's see if I can catch another couple legs. So I waited and waited and waited. I waited to breach and close below this level. I took a couple minutes scalp on this. Again, another quick scalp, which was a decent scalp. I think that was um, my best trade of the day at that point. And then I caught another scalp in here. I think this was right around 350. It was. We had a green 350 candle, but I said, you know what? I don't think we're going down. So I just kind of took a flyer on this. We bounced off the 9 back to the downside, caught it here, and wrote it down for 3 or 4 minutes. Was red for a couple minutes, but not a big deal. And marketed out down here again, where I had another level. I had to look for this level. This was a 30-minute demand zone, left over from a few days ago. So that's the level that I was looking at over here. But again, I missed a big drop, caught a nice couple of plays on the drop. It made a green day, a decent day, a really, really nice day at this point. But that's how she played out. I missed the big part of it. Oh, well, it happens. We move on to the next trade, folks. We miss trades all the time. So, and again, I'm just, prove to myself, hey, don't step away during power hour. So that's how she played out today, folks. Overall, it was a slow day until it was no longer slow. So slow. And then all of a sudden, a heck of a lot of excitement in here. Lots of folks did very, very well. But I didn't. I did well down in here. I just didn't catch the big part of the play. Now, if you enjoy our videos, please go ahead and give us a like and a subscribe. Don't forget to turn on your notifications so you can be notified when we drop new content. Again, which is just about every day and sometimes on the weekend. Now, on the weekend, we really focus on the psychology of trading. A friend of mine messaged me recently and said, okay, I have your strategy. Now, what's the best way to go about this strategy? How do you measure yourself? And I said, I measure myself based on the execution of the strategy. The strategy is just part of it, folks. You can have the best strategy in the world, but if you fail to execute, guess what? You will not do well. That's just the bottom line, folks. Now, if you are interested in live daily trading, please head on over to our live trading Discord. It is called Trading Decoded. Best Discord in the world, folks. We do live daily trading every single day from bell to bell, every single day, folks. Head on over there. We're going to give you that first week for free. If it's for you, wonderful. If it's not, no problem. Come back, check out the daily update videos. No problem. We appreciate you all. Now, if you're interested specifically in the 920 trading strategy, head on over to my website, 920trading.com. Again, the link for that is also down below. You don't have to spend thousands of dollars on some super secret strategy with the secret sauce. That's not really secret. There are no secrets in the market, folks. You don't have to spend thousands of dollars on something that you don't know is going to work for you. You don't know if anything's going to work for you until you give it a shot, folks. It's there. It's at no cost to you other than a little bit of your most precious commodity, which is time, folks. We're all on a timer, guys. We're all going to get to that ultimate destination one of these days, some folks quicker than others. But anyway, we appreciate everybody for spending a little bit of your precious time with us. We appreciate you all. Hope you have a great day today. We're going to do it again tomorrow, folks, and we will see you in the markets.